Markets are rattled, volatility is back, and investors are bracing for impact. Except Jamie Dimon. While everyone else sold their shares in a panic, JP Morgan just made its boldest move of the year. They went all in on AI giants. During the height of tariff chaos and trade war panic, they went in big on three names: companies with real earnings, real resilience, and major AI upside. When no one was looking, Jamie Dimon was paying attention. He got a hell of a lot richer while everyone else panicked. This is the definition of smart money, and I'm breaking it all down. So hit that like button, subscribe, and stick around until the end. In early 2025, markets went into a tailspin. After President Trump reintroduced sweeping tariffs, including a staggering 125% on Chinese imports, global tensions exploded. China hit back fast, investors panicked, stocks plummeted. Growth names were especially hard hit. But then came a 90-day pause, just enough time for institutional players to step in, and JP Morgan wasted no time. Nvidia was hit hard in the panic. Even with explosive earnings and market leadership, it shed over 20% in days. But JP Morgan wasn't scared. They were loading up. In the fourth quarter of 2024, they added over 4.5 million shares, increasing their total position to more than 413 million shares, valued at over $55 billion. That's 4.37% of their total portfolio. Their average buy price? Just over $2,643 per share, right during the dip. The return so far? Up over 330%. Why Nvidia? Because they dominate the AI stack. Hardware, software, data center infrastructure, it all runs through them. From OpenAI's latest image models to Meta's new generative engines, Nvidia chips are the backbone of modern AI. And their customers aren't retail buyers. They're trillion-dollar hyperscalers with deep pockets. Even with tariffs, Nvidia's demand isn't slowing. Their revenue growth? 114% year over year. Net margins? 56%. These numbers are elite. After the tariff pause, Nvidia bounced nearly 20% in a day. JP Morgan's timing was perfect. Next, Apple. At first glance, it may not scream AI, but behind the scenes, it's making serious moves, and JP Morgan sees it. During the same quarter, they added over 3.7 million shares, bringing their total to 183 million shares worth over $45 billion. Their average buy price? Just under $99. And that move has already paid off. Apple rebounded over 15% after the tariff pause was announced. Why the dip? Apple's hardware manufacturing is deeply tied to China. With a 125% tariff looming, fears exploded over iPhone pricing, supply chain delays, and rising costs. But JP Morgan didn't see doom. They saw opportunity. Apple is shifting fast toward on-device AI, custom silicon, AI-driven features in iOS, privacy-first generative tools. This isn't a hardware play anymore. It's a full ecosystem with AI baked in. And when panic struck, JP Morgan bought the dip. With one of the strongest balance sheets in the market, unmatched brand loyalty, and the scale to absorb short-term headwinds, Apple remains one of the safest AI-adjacent bets out there. Finally, Amazon. The e-commerce headlines always dominate, but the real story is their AI-driven infrastructure, specifically Amazon Web Services. JP Morgan added over 3.1 million shares during the fourth quarter of 2024, bringing their stake to nearly 183 million shares, worth over $40 billion. Average cost basis? Just under $99 per share, already up nearly 94%. Why? Because while tariffs may squeeze product margins, AWS continues to expand. It's not just cloud, it's now the AI engine for global businesses. Amazon is building its own custom chips, lower cost, higher control. They're expanding into small and mid-size enterprises. They're locking in AI contracts while others are still waiting for clarity. Even during the sell-off, JP Morgan saw AWS for what it is, the digital economy's backbone. When the pause was announced, Amazon spiked nearly 12%. But long-term, this isn't a quick trade, it's a structural position. Volatility scares off the weak. But not JP Morgan. In the middle of one of the most politically charged economic moments in recent years, they went all in on the AI names they believe will lead the next decade. Nvidia, Apple, Amazon. Not hype, not hope. Just fundamentals, positioning, and strategic timing. And that's the real play. Spotting quality when the headlines are screaming chaos. Want more breakdowns like this? Hit subscribe, drop a comment, and grab that free guide before you go. The 5-minute money shift is linked below. Let's build wealth while the world hits pause.